Let me throw up this chart, which takes a look at really how sentiment has improved and, in fact, has almost consistently been better over the last few months when it comes to Ether versus Bitcoin. This really showing that we're seeing that flashing of the bullish signal, the MACD crossing above that signal for the first time since April. And, in fact, since the June low, we've seen Ether more than doubling and very much outpacing the gains in Bitcoin. This software update, how significant is it?
Well, firstly, thank you so much for having me along this morning to talk. So this is a really pivotal moment for the Ethereum network. As we know, this is the second largest cryptocurrency by market cap, and it's also known as the utility platform. This is the layer upon which the blockchain economy is going to be built. The importance of this is, it would be, if we're to draw an analogy to regular life, it would be like as if you're trying to change the engine of a plane mid-flight. They are pivoting away from the proof of work consensus mechanism, which is how all the agreement is connected between all the different holders of the miners of Bitcoin and Ethereum in this case, and then moving towards proof of stake, which is a completely different consensus mechanism, a totally different model for arriving at agreement, but it's also recognizing and is the foundation for an overhaul of Ethereum more completely. If you listen to comments from Vitalik Buterin, who is one of the founders of the Ethereum network, he believes it's only at about 40% completion. And with this changeover from proof of work to proof of stake, he anticipates that move now is about 55% complete. So while in and of itself, it's a leap forward, that 15% increase is a leap forward, there's still a lot of work to do. But what's really the fundamental piece of this is the audaciousness of what it is that they're trying to do with that move from a very underpinning of proof of work to the new proof of stake consensus mechanism.
And it is audacious, and we talk a lot about the benefits being transaction speed, of course, the environmental impact as well, or the less environmental impact, perhaps would be a better way of putting it. But what are the vulnerabilities? Because this is not a system that has been battle tested, essentially, in what is still a very risky part of the market.
Yeah, and I think that's a fair point. I think even those who are Ethereum supporters, if you like, would definitely recognize it, that you're moving away with a proof of work model. Not only is Ethereum running it, but also Bitcoin. So the two, that's 60% of the market cap of blockchain economy more broadly, just in those two, both using proof of work. So this move away to proof of stake, untested, in the battle sense, as you say, that's a big risk. But I think it's a risk worth taking. And from their point of view, the Ethereum network has said, look, we need to address some of the security issues around proof of work. Moving into this proof of stake model reduces the chance of there being a 51% attack, for example, and certainly dilutes and decentralizes, very much lives up to that decentralized focus, decentralizes the control around the Ethereum network, which in turn increases its security, reduces its vulnerability.
So is that supportive for prices when it comes to Ethereum and other crypto assets? How would that factor into the prices that we're seeing right now?
Yeah, I think it definitely plays a very... I think what it points to really is about the maturing, and we've spoken so much about this, but this is the audacity of what they're trying to do. They pulled this off successfully, and this is now going to become a flag bearer for the blockchain economy. This is why it's so thrilling to be, in our sector, looking at what they're trying to do, and the gumption that it takes, and the technological know-how to do what it is that they're doing really is quite thrilling. And I think that that's probably what's really exciting crypto investors. I think that's what's engaging the crypto community. Obviously, we're still sitting within the broader macro picture of what else is happening in the economy. We saw those numbers come out of the US for their CPI numbers. All that data kind of feeds into the investor sentiment and where we see it going. But this really pushes the crypto economy forward in its maturing, and it's very exciting.
Tell us a little bit about those macroeconomic challenges and what that means for pricing going forward, because it seems that 24,000, at least for Bitcoin, seems to be a resistance point that we're not getting over in the Asian session, at least.
Yeah, I would agree with that. Certainly looking at the numbers that we can see on BTC Markets, and also looking at kind of the general industry data, this does seem to be a bit of a sticking point. What we've seen at BTC Markets is that there's plenty of buyers, but the sellers have gone away. When we look at the ratios on the market, it's 5-to-1 buy to sell. People are just not budging on this price point. So I think that they're holding with the expectation that we're going to see a recovery and a return to the prices that we experienced probably in the latter half of 2021. So, I think there's a lot of wait and see. And I think that probably mirrors a lot of what we saw in terms of liquidity and trading volume in traditional finance. But certainly because of due to the size of the crypto economy, the smaller size, you can really amplify that lack of liquidity and the impact it has on price. But the fact that the sellers aren't there, it speaks to the conviction of those who are holding Bitcoin and perhaps for the longer term. So, let's see where we are in about 18 months' time in terms of that price point. Let's see where we are in about 18 months' time in terms of liquidity in the market and broader engagement.
Caroline, a successful merge, how much does it deepen the distinction between Ether and Bitcoin, particularly when it comes to fintech and in institutional applications for Ether? And are you starting to see that being priced into the futures curve, or do you think that's going to be reflected more in pricing?
Yeah, I think that's true. But I think also you've got to keep in mind that the purposes that these two assets serve differ very much so. I mean, Ethereum is a utility play. Bitcoin is a store of value. It's a payments mechanism. So they're quite distinct and quite different. I think what we're seeing with Ethereum, and certainly over the last bull market, we saw the growth in the use of its application with decentralized finance and with NFTs. Both of those are still very much in their nascency. And I think when we get post the merge and the other modifications that are due to come through on the Ethereum network, Vitalik Buterin again has been very clear that there's more to come once we get past the merge. So with that plan ahead, we're going to see an increasing number of businesses and building on the Ethereum platform. So I think we're going to see that swell and grow, and certainly that would be the expectation given where they are now in their growth cycle. And I think we're going to see that increasingly getting priced in, certainly on the Ethereum piece.